Hi guys, welcome back. This is the Smart Invest. In this episode, we will evaluate the fundamentals of the Tesla company, and at the end of the summary, we will try to determine a stock value that we consider fair. We will also find out if I own Tesla stocks in my own portfolio by the end of the video. What do most people know about Tesla? Tesla is an American company founded by Elon Musk in 2003. The company is known for manufacturing electric cars and developing autonomous driving technologies. The Elon Musk acquired Tesla initially had a tough start and faced near bankruptcy situations several times, but eventually managed to become profitable. Tesla's cars have earned recognition in the market for their long range, dynamic acceleration, and innovative software features. Additionally, Tesla offers energy storage solutions, such as home batteries. We will also talk about the Tesla Powerwall later in the video, which can sustain your household's power supply for days in case of a blackout. The company regularly updates its cars through software, enabling the addition of new features. Elon Musk, the company's founder, is active in both the automotive and space industries and has ambitious goals for the future, including Mars colonization and widespread adoption of self-driving cars. Tesla investors would likely be very happy when autonomous driving becomes a reality. Tesla stands out among modern technology companies with its commitment to sustainability and innovation. Whenever Tesla's name comes up in the media, it's often said to be highly overvalued and prone to collapse at any moment. And of course, every big investor is shorting Tesla. They told. There is no exact information about how much money they have lost, but reportedly, large sums have been burned by Tesla short sellers in the following cases. David Einhorn. The famous hedge fund manager, David Einhorn, and Greenlight Capital lost money in 2019 with their short positions against Tesla. Einhorn had been criticizing Tesla's business model and stock price for a long time, but the continuous rise in Tesla's stock price taught him an expensive lesson. Jim Chanos. Jim Chanos, the founder and head of Kinekos Associates, who famously predicted the Lehman Brothers bankruptcy, also got caught up in shorting Tesla's shares, but he lost due to the rise in the company's stock price. Mark Spiegel. Mark Spiegel, the founder of Stanful Capital, publicly criticized Tesla and its CEO, Elon Musk, for a while. He held short positions in Tesla's shares, but he lost due to the rise in the stock price. But what's the real deal with Tesla's fundamentals? I gathered information from Tesla's latest quarterly presentation and report. We can see that in the second quarter of 2023, Tesla sold nearly double the number of cars as compared to a year ago, precisely an 86% increase. At the same time, the number of supercharger stations has also increased by 33% in just 1 year. This is an important aspect in evaluating the company because recently, both Ford and GM have signed contracts with Tesla. And from 2024, they will be using Tesla's supercharger network. Current signs suggest that other automakers will follow suit, and the global electric vehicle charging network will be in their hands. This is already a massive cash cow for Tesla, alongside their car sales. But what about Tesla's core business, car manufacturing? One of Tesla's significant advantages lies in its incredible speed and efficiency in car manufacturing. They continuously upgrade their factories to be capable of producing in larger quantities. It's clear to see that the Shanghai Gigafactory is already capable of producing over 750,000 Teslas annually, which worked at an annual production capacity of only 450,000 in the first quarter of 2022. Production of the Semi has started in small numbers, and hopefully, we won't have to wait too long for the Cybertruck. The Cybertruck's production is theoretically set to begin in 2023 at the Berlin Gigafactory. From 2017 to the present, Tesla has gained nearly a 4% market share in America, and in Europe and China, they're increasingly gaining more market share. Their development in the field of artificial intelligence is exponential, thanks to their Dojo device. Tesla's Dojo is a supercomputer designed and built by Tesla for computer vision video processing and recognition. It will be used to train Tesla's machine learning models to further develop the full self-driving advanced driver assistance system. We can see that the miles driven with the FSD beta are also exponentially increasing, and they're continuously rolling out software updates. Another interesting point is that in the energy storage industry, they managed to achieve a positive gross margin in the last year. The company has consistently had a positive free cash flow in recent quarters, even generating $1 billion in free cash in the last quarter. While their revenues have decreased because Tesla significantly reduced the prices of its cars, this could serve the company's interests in the long term. Tesla's competitors are still struggling in the electric vehicle market, unable to sell their cars at a profit. Therefore, by reducing their prices, Tesla has strongly challenged the struggling competition. Their manufacturing capacity is rapidly increasing from quarter to quarter. We can see a comparison between Tesla's revenues and operating margins with the S&P 500 stocks and the average data of automakers. Needless to say, Tesla stands out among competitors in terms of growth and margins. It's quite strange to think that when I analyzed the company a few years ago, the situation was so different. And now Tesla is taking over the automotive industry front of our eyes. If we look at the company's revenues, we can see that, apart from car sales, their revenues are also steadily increasing from the energy sector. Here, I'd like to go back to one of Tesla's great inventions, the Powerwall. This is a large battery that can be installed in your home, costing between $3,500 and $8,500, and it can store electricity ranging from 2 kilowatts to 11.5 kilowatts. This can be very practical if there's a power outage. Or, just in case, a zombie apocalypse breaks out, and you want to charge your phone one last time to post pictures of the zombies. But back to the topic, at the end of the quarter, Tesla successfully pocketed $2.7 billion in profit. If we look at the company's balance sheet, we can see that they have strong fundamentals. They've been reducing their debt over the past quarters. Now, let's take a look at the company's revenues and future expectations. I've created an Excel table with Tesla's data, and we will play with the numbers to get a fair stock price. In the following, I will outline 3 possible scenarios: an optimistic one, a pessimistic one, and an intermediate future outcome. In the table, you can see the company's revenues, profit margin, net profit, EPS, number of shares, P/E ratio, and finally, the stock price derived from these numbers. We can see that in 2020, the company had a P/E ratio of 400 when its stock price was $103. Despite increasing its revenues by 170% and its net profit by 18 times. The stock price dropped back to $103 by December 2022. It sunk back. It fell like a forgotten wallet from the roof of a car that was starting to move. This is why valuation is very important when buying a company's stock. The first scenario is a very pessimistic one. We assume that the company will not be able to achieve the forecasted revenue growth, and due to the increasing competition in the industry and Elon Musk's unexpected price cuts, they won't be able to improve their profit margin. They will continue burning money for years with FSD and Optimus, which will further reduce the profit margin. As a result, the P/E ratio collapses, and Tesla faces a massive loss. In this not-so-favorable scenario, a $100 stock price by 2023 is possible, even if the company triples its current revenues. This is why valuation is crucial. No matter how good the growth is, if you buy the stock at a high price, you can still lose money even with an excellent company. In the second, intermediate scenario, we can see that the company continues to achieve annual growth between 25% and 30%, and over time, its profit margin normalizes. The manufacturing cost of cars decreases. Profits start to increase from the energy sector. The company begins to buy back its shares over time. Valuation decreases as the company grows, but it maintains its premium pricing, trading at a P/E ratio of 30 in 2030. In this case, we can expect a $950 stock price, which is not a bad return compared to the current price of around $240. Now, Let's look at one last, quite wild scenario. Tesla is almost capable of achieving the annual 50% revenue growth predicted by Elon Musk. They successfully launch FSD. They acquire the global electric charging network. The competition slowly weakens and goes bankrupt, so Tesla captures most of the market. They launch Optimus and begin mass production. They manage to protect and increase their profit margin due to licensing fees and their market advantage. Expectations for Tesla remain high, and even in 2030, they trade at a P/E ratio of 52. In this case, we could get a $3,700 stock price, which is more than a tenfold increase from the current stock price. These are just forecasts. You can put anything in Excel. We can see that there is quite a large distance between the two extremes, $100 and $3,700. It should be noted that in the video, no financial advice is given. So, let's summarize the evaluation. Growth: Tesla is growing extremely rapidly compared to any company, and when we consider that we're talking about an automaker, it's even more astonishing. It's rare to come across a company that grows this fast, so in terms of growth, I rate it 9/10. Stability: the company has stable cash flow and no apparent external factors that could undermine its market position. It has almost no debt, but there is something that might be a risk factor, and it's not the company itself but Elon Musk. The person who took Tesla to its peak is the same person who can cause significant drops in the stock market with just a seemingly humorous tweet. Fortunately, there are a few others beside our genius who sometimes try to pull him back a bit. And perhaps thanks to this, Tesla's new models still come with a steering wheel. Perhaps the biggest advantage and risk factor for Tesla is Elon Musk himself, so in terms of stability, I rate the company 8/10. Valuation: the company consistently has a high valuation in the market, driven by the enormous potential it holds and the hype surrounding it. In terms of valuation, I rate it 4/10. To conclude, I also own Tesla stocks in my own portfolio, and I continue to add to my position on significant dips. That's why it's important to have the right knowledge and be aware of the company's approximate value, because then you'll feel when it's time to enter the market. It was an exciting time at the end of 2022, but in retrospect, it was worth buying the stock on the way down, especially around $103. Tesla has all the opportunities ahead to achieve tremendous future growth. If you liked the video and found it useful, please hit the like button and subscribe. See you soon.